Happy Tuesday out there, folks. This is Darius Dale here to present our macro minute for Tuesday, September 6, 2022. Welcome back from the Labor Day holiday. Ready to just get right into it. So starting with asset markets, we have stocks up this morning, commodities mixed, crypto up, dollar up, global bond yields up, market moving headlines. So in trust, we trust for now, at least. Liz Truss, the new prime minister of the UK. So you have the pound rebounding and an index of domestically focused UK stocks rose as traders assessed the new agenda for Prime Minister Liz Truss. She's finalizing plans for a £40 billion or $46 billion support package to lower energy bills for businesses and consumers. Truss is considering two options, of one of which is capping a firm's energy costs, similar to a proposal that would protect British households. The other option is a percentage or unit price reduction that all energy suppliers must offer companies, according to documents seen by Bloomberg. The incoming government is planning on capping average annual household energy bills at or below the current sort of 1971 per pound. The move would prevent household bills from jumping 80% in October after the regulator said the price cap would rise to an average annual rate of 35.48 pounds without further government intervention. So the markets are celebrating this, not aggressively, but certainly we're not seeing the kind of aggressive response to the downside of things like the pound, which you might expect on this sort of fiscal expansion, which is a signal from the currency market that growth is the bigger factor driving the currency markets at the current juncture, as opposed to sort of fiscal profligacy, et cetera. One new shifting gears a bit. One new scenario where margin calls might be a good thing. So European energy trading risk grinding to a halt unless governments extend liquidity to cover margin calls of at least 1.5 trillion, according to Norwegian energy company Equinor ASA. Aside from inflating bills and fanning inflation, the biggest energy crisis in decades is sucking up capital to guarantee trades amid wild price swings. So with the higher volatility we're seeing in things like European nat gas prices, the brokerage houses over there are actually increasing margin and collateral requirements, which is causing the energy trading companies, which are moving around, buying, selling, procuring, et cetera, nat gas, it's causing them to have to post additional margin requirements. So their inability to post additional margin requirements may actually cause the price to go down to make these positions because they won't be able to support higher net asset value positioning. So that might be a good thing. We'll see if this takes some pressure off of the European energy situation, which, by the way, kudos to my friend Andreas Steno Larsen, who's done a lot of great work on helping us understand some of these European energy dynamics. It's not as bad as we think it is over there. They have plenty of storage. It's very likely that we don't see the left tail of scenarios from a energy situation perspective, although we are continuing to see shenanigans with respect to Gazprom and Nord Stream 1. Anyway, shifting gears here, the global liquidity cycle downturn continues. So the RBA, the Reserve Bank of Australia, raised rates by 50 basis points to 2.35%, which is the highest since 2015, and signal more rate hikes ahead. Brazil, the BCB, reminded investors of a September rate hike, remains on the table. Everyone thought that the BCB was done hiking interest rates a while ago. And then Chile looks set to increase by 75 basis points to 10.5% later today. We got a big week of policy updates for what appears to be our centrally planned global economy. Outside of this Apple event, we get that on Wednesday. We're going to be unveiling new iPhones and watches, et cetera. That could be a market moving catalyst, just given the size of Apple in terms of the index. But you got the Bank of England Governor Andrew Bailey at the Treasury Committee on Wednesday, speaking there. Fed Beige Book on Wednesday as well. Cleveland Fed President Loretta Mester speaking Wednesday. You have the European central bank rate decision on Thursday. I think you have the Bank of Canada on Wednesday as well. Fed Chair Jerome Powell speaking at a Cato Institute conference in Washington on Thursday. And then you get China's PPI, CPI, aggregate, and the credit data on Friday, or at least Thursday overnight into Friday morning. And then lastly, EU energy ministers, they have an extraordinary meeting on energy intervention in electricity markets on Friday. So we are in a new era, very clearly, from the perspective of fiscal policy and fiscal dominance. We've seen this since the beginning of the pandemic, and now we're seeing the the willingness of fiscal authorities to intervene in things like energy markets, et cetera, is something that, obviously supportive for growth in the near term, but obviously it's going to create a lot of incremental inflation over the medium to long term, just given that we don't necessarily are seeing the demand destruction we need to see to right size these markets from a supply demand perspective. Anyway, big movers this morning at Ethereum. Merge is definitely doing its job here. Ethereum's up 5% to minus 3% month over month. 2-year nominal Treasury yield up 9 basis points to 3.48%. That's up 25 basis points month over month. Shifting gears, getting into our volatility adjusted momentum signals and probable ranges. Got the US dollar index, that's bullish FAMs. It's nearly overbought. Got about 0.7% upside, 1.7% of downside there. Gold, bearish FAMs, sort of in the middle of the range there. 10-year nominal Treasury yield, bullish FAMs, not quite overbought. 8 basis points of upside, 25 basis points of downside. High yield credit spreads, still bullish FAMs, middle of the range there. S&P 500 neutral VAMs oversold. VIX bearish VAMs overbought. NASDAQ 100 neutral VAMs oversold. Russell 2000 still bullish VAMs, by the way, is oversold as well. Thought that was pretty interesting divergence. You got S&P 500, NASDAQ 100. Two things would have a lot more sort of traditionally defensive kind of weighting in the index, actually underperforming, because really what's driving the move lower in equities is this sort of concept of phase 3 from a monetary policy perspective, and the rising interest rate volatility that we've seen associated with that, which is weighing on the NASDAQ 100 and the S&P 500 relative to the Russell, which has less duration sensitivity in the index. Anyway, Bitcoin, bearish FAMs there, got about right in the middle of the range, 6% downside, 5% of upside. Ethereum bearish FAMs, that is overbought this morning, 0% upside with 19% downside to the lower boundary of the probable range. So be careful there, chasing the merge. Shanghai Composite, that is neutral FAMs right in the middle of the range. WTI crude oil flipped to bearish FAMs. Now that's in the middle of the range, so definitely something to call out there. This OPEC Plus, I think they tried to sneak in a kind of a small sort of output cut, if you will, to stabilize markets. And they actually signaled that they wanted markets to stabilize very clearly from a quantitative perspective. The markets are not stabilizing, so maybe they're going to have to do a little bit more if they want to prevent the slide from continuing. And then lastly, agriculture, that's bearish FAMs. Finally backing off the upper boundary of the probable range there. You got 2% upside, 5% downside. Industrial metal, bearish FAMs, about 1% of downside versus 6.6% of upside. So with that, Darius Dale presenting our macro minute for Tuesday, September 6th, 2022. And for all those of you who are sick of getting taken advantage of on the other side of the trade by institutional finance, we're going to be presenting our macro scouting report for the September. It's something we do every month, about 100, 125 slides of all the information we think you need to weaponize some of these key cycles that matter, the growth cycle, the inflation cycle, the liquidity cycle, in terms of, sort of perpetuating positive outcomes from a portfolio construction perspective. So also, it's obviously just a fantastic opportunity to learn for those of you who just enjoy learning on how the system works, how the global economy works, how to sort of construct portfolios and do thoughtful tactical asset allocation at the institutional level, which is something we are very proud of in terms of democratizing some of these learnings. So at the end of the day, we'll definitely come check us out if that's something that you're interested in. Again, that'll be out this afternoon. Cheers.